This is Christopher Lewis from the dailyforex.com trading desk, taking a look at the upcoming February 29th Forex session. The pair in front of you, of course, is the Euro US dollar. As you can see, I do have the Fibonacci retracement tool out. I also have a moving average. This is the 200-day moving average, EMA. And of course, I have the 135 and the 130 levels plotted on the chart as well. We have a nice, interesting confluence of events going on in one spot right now, and that typically will lead to some type of turn in the market. In this case, all things being equal, this looks like an area where we could expect to see a bit of a weakening of this pair. However, during the session, we will see the results of the Europeans LTRO, which is basically, in a nutshell, where the banks can come to the ECB for a 1% loan for 3 years, and they will announce how many of the banks came and what they borrowed. The consensus is about 500 billion euros, and while it's very difficult to predict the market's reaction to this, some people claim that the higher the number, the better, because it's going to liquefy the markets even more. But other people counter that, saying, well, doesn't it mean that the banks are in a lot more trouble than we originally had anticipated? Conversely, for a lower than expected number, some people will say that perhaps the banks aren't looking to lend, or there's just no demand, which is probably true, quite frankly. Or perhaps a low number is strong because they don't need the financial backing. As you can see, this leads to a session that can be very chaotic. And truthfully, through my years of trading, I've found that situations like this are best left alone until we get a daily close. Looking at this, I can see a couple levels that I want to pay attention to. If we can break below the bottom of the Monday session, that would be weak enough for me to consider selling because of the aforementioned facts of the 50% retrace, which is right here, the 135 level, and then of course the EMA. Once you combine all of that with perhaps a weak candle, it's a fairly significant move, fairly significant signal, I should say. However, if we can manage to close above the 135 level, it would be a break above the 200-day moving average for the first time in quite some time, actually, since basically the start of this move. And if we got that, that would be very bullish. It looks as if the session could be one that determines the move of the euro for the time being, for maybe the next several months. Of course, we've all noticed that the euro has the tendency to be very buoyant and flying in the face of, quite frankly, a lot of people's intuition and their understanding of the markets. It's been a very difficult pair to trade. With this being said, it'll be very interesting to see what this reaction is. And as such, the knee-jerk reaction could be one that gets a lot of traders into trouble. So for myself, I am simply waiting for one of these two levels to give way on a daily close, and until then I'm content to sit tight because I know how quickly you can lose gains or gain losses in a situation like this.